Ladies and gentlemen, good morning. My name is Lindsay Aller. I run a company called Argonaut Resources, and we are exploring for and developing copper and copper cobalt in Zambia. We're listed on the Australian Stock Exchange code ARE. At the moment we have over 1 billion shares on issue at about 2.4 cents for a market cap a bit above that at the moment, actually about 34 million. We have just under $6 million cash on hand, and myself, Pat Elliott, Andrew Bursell, Malcolm Richmond, 4 experienced mining company directors. Our primary focus is the Torrens Copper project in South Australia. It's a high-risk, high-reward exploration play. It's a iron oxide copper gold system nearby to Olympic Dam. Secondary project is called Lumwana West in Central Africa in Zambia, not far from the DRC border. And our third project that we operate is a farm-in where we're farming into a gold project nearby to Kalgoorlie in Western Australia. So Torrens is essentially a massive exploration target. It's a geophysical target. It sits in a very interesting and prospective geological address, and we've confirmed through very limited drilling over the life of the project that it's an iron oxide copper gold system. It's one of these systems whereby if we have an exploration hit in the next 12 months or so as our drilling commences, it's going to be an unambiguous hit. That's the nature of these deposits in this area of the world. This slide, just briefly, is a satellite image of the Olympic Dam mine site. The Olympic Dam ore body is there projected to surface and shown as the red boundary. And the Olympic Dam deposit, for those unfamiliar, is the second largest copper equivalent deposit in the world behind Escondida in Chile, and it's only marginally behind Escondida. The yellow line on that picture is the outline of our gravity anomaly, which is huge. Within that are our gravity targets, residual gravity targets, which are shown as white areas. There's a lot of scope for discovery. It's a geophysical play, as I mentioned. In the centre there is our former gravity data, which we were working on until recently. On receiving our final approval to proceed with drilling in February this year, we flew a new gravity survey shown there on the left, and also magnetic shown on the right. We've sharpened our resolution and we're getting ready for drill targeting. Briefly, in 2007, we were able to get 3 drill holes into the ground and in between permitting issues, and essentially one of those drill holes drilled within 50 to 100 metres from what we were looking for, which is essentially in our existing known big iron-rich system, is where that iron, where that magnetite has been converted to hematite and contains copper sulfide mineralisation. So we hit glyphs of this in 2007 and were subsequently prevented from continuing that drill program. Those access impediments have now been overcome and we're getting ready to move forward. As I touched on earlier, we have many similarities with several excellent mines and deposits in the area. Olympic Dam, a huge deposit and large-scale mine. Carapatina there, under construction by Oz Minerals at the moment, and Prominent Hill up in the top northwest of the map there, found in 2001 and in production at the moment also by Oz Minerals. We're in joint venture with a company called Aeris Resources, who's also here at 121 today. Aeris already earned a 70% interest through a farm-in joint venture. We're the operator of the project, and the joint venture is operating on a pro rata basis going forward. The access approvals that were required to get on the significant one that was a long time in coming was the native title. Those issues were overcome in 2016 and approval was granted in March 17 after a very, very long period of time. Operational and environmental approvals were granted by the relevant ministers in November last year, and an Aboriginal heritage approval was granted by the Minister for Aboriginal Affairs in February this year. This was the final approval required for access, and we're moving forward. That's a photograph not of Lake Torrens, but of a similar salt lake with drilling activities going on. This is what Lake Torrens essentially looks like. We will be using a helicopter-supported drilling technique. We'll be diamond drilling. Our holes will typically be 1,000 plus metres. We'll be drilling 25 to 30 holes at a total cost of 15 million Australian dollars. We'll commence with one drilling rig and we'll move on once the safety and environmental procedures are bedded down to 2 rigs. I'm just going to touch briefly on my remaining time on our copper cobalt deposit in Central Africa. This deposit sits in between First Quantum's Sentinel mine, which is just west of us, Barrick's Lumwana mine, to the east of us, and further east, First Quantum's Kansanshi mine. On that slide there you see 810,000 tonnes of annual copper production, which has all been installed since 2005. So it's one of the growth production areas for copper in the world. Most of these deposits also have cobalt byproducts. Ours certainly does. Lumwana and Kansanshi does. Sentinel has a nickel byproduct. We hold 80% in our project, and it's just been renewed by the Zambian government for a period of 10 years. The neighbouring deposits are all large. You can see the stats there. Large low-grade deposits and the related production capacities shown there as well. We started drilling this deposit in August 2011, back when cobalt was a far more modest price, about $10,000 to $11,000 per tonne. We were immediately onto copper mineralisation, and we vigorously drilled the deposit over 2011 and 2008. We principally drilled at an area called Nyungu Central, but we also got onto the deposit in an area called Nyungu South. We have several other surrounding areas that are yet to be properly drill tested. When we were drilling in 2011 and 2012, we were also intercepting cobalt that was of little interest to us at the time. In fact, it was almost of concern to us. Obviously that has changed in recent years, and people in Central Africa with cobalt in these types of deposits are now capitalising on it through production of cobalt hydroxide and cobalt metal in the area. Our deposit at Nyungu is pre-JORC. The drill spacing at the moment over a 1,700 metre strike length is only 200 metre spaced traverses. We need to infill that in order to take it into JORC or NI 43-101 category. But at the moment, we have, in approximate terms, about 750,000 tonnes of contained copper and about 20,000 tonnes of contained cobalt. These are visualisations of our deposit. On the right at the top, you'll see a three-dimensional visualisation of the copper. On the bottom, the cobalt. And the two cross-sections on the left-hand side are copper at the top and cobalt at the bottom. The cobalt sits in the footwall of the main copper deposit in a predictable location. We haven't to date drilled specifically for cobalt, but that is now available to us, and as we move through some metallurgical work that I'll touch on, it will drive that cobalt drilling work. In January this year, we undertook a mining study of our main deposit at Nyungu. It turns out that its mining characteristics are exceptional. At a pit down to 280 metres depth, we've got a stripping ratio of 1.5 to 1, 1.5 tonnes of waste to 1 tonne of ore. That's exceptionally low, uncommonly low. If we take it to the bottom of the known deposit at just below 350 metres depth, we're still at a very attractive stripping ratio of 2.3 tonnes of waste to 1 tonne of ore. Essentially, this project needs to be taken forward through the development of a metallurgical flow sheet, which is the position we're in now, that the Zambian government has reissued our licence for a period of 10 years. Which just came through in late February this year. So we're moving forward into an intensive phase of metallurgical testing so that we can deliver to investors in this space a metallurgical flow sheet, some scoping economics and a capital cost to take the project forward. So just to summarise, we're capped at just over $34 million. We have excellent exposure to copper and cobalt in two stable quality mining jurisdictions, and we're very interesting and good buy in the market at the moment, and that's what brings me here today. Thanks for your attention.